Right. Morning, everyone. Welcome back to our morning kappa at 8. Joseph here. So looking at the our Hang Seng Index, it managed to climb higher last Friday. At this juncture, it has crossed above the 20 days moving average, going to climb above the 50 days moving average. Over the one month, you can see that most of the time, the index has been hovering below this blue color line, which is the 50 days moving average. So if this week, before we close for the year end, right, Hang Seng could climb above the 50 days, then it will boost the market sentiment for the first week of January, right? So at this juncture, the 25,000 point remains as a key support level for the Hang Seng Index. So overall, sentiment has become much positive over the week, and we can see that over the last 1 week, right? Some of the stock actually have came down, but the AIA has been bucking the trend, moving upwards during the last 1 week, right? And as for today, we'll be looking at the AIA Group, stock code 1299, where the stock have climbed above the 80 Hong Kong dollar resistance, heading towards R1 85 and followed by 88 R2. Downside support is at market 77. Secondly, we have the Puzi Biologics, stock code 2269. They have climbed above 34 Hong Kong dollar resistance. So at this level, Puzi Biologics are also trading above this 21 days moving average, showing that the technical setup remains bullish so far. So after the breakout, Puzi Biologics will be testing the 36 and followed by 38 Hong Kong dollar. Downside support is marked at 32, right? And now, over the week, you may not aware, right? The Europe key index, XXXP, have breached the 580 to close at 587. So at this level, this XXXP, which is the benchmark index for the European market, is trading at the all-time high right now. So after the breakout, right, the SXXP will be heading towards 600 and followed by 620 resistance. So on a weekly resistance, it will be a 599.80 and downside will be a 575.22, right? It shows that sentiment remains bullish for the European equities market. Looking at the US equities market benchmark index, S&P 500, just climbed above the 30 days moving average last Friday, thanks to the resumptions upward movement by the tech stocks. So this week, the S&P 500 will be testing the 6850, right? So if the breakout happen, the S&P may challenge the all-time high level. It could go as high as a 7,000 point level so far. So over the Friday, you can see that the market actually moving into a big tech company such as the Nvidia went up by 3.93%, Avago Broadcom 3%, Micron MU went rebound by 7%, right? And we do see trading opportunities in two counter today. One of the key theme over the weekend that we have learned is that the uh, one of the this investor have actually encouraged SpaceX to come into a SPAC entity to list the SpaceX and then issue shares for the existing Tesla shareholders, the Pershing Square owner, right? So I think over the week, apart from the talking about the Tesla and also the SpaceX, now another company that actually involved in the launching of the rockets is actually a company called Rocket Lab. So right now it have actually break past the 70 US dollar, heading towards 78 and followed by 85. And downside support right now is at 62, right? And secondly, right, we can see that the big cap have started to actually garner attention again. So among the big cap, I think the in terms of valuations, the one that relatively cheaper or have more upside right now would be the AMD, right? Advanced Micro Devices, which are pending to break out on the 215. So breakout happen, AMD will be going towards 240 and followed by 270. Downside support is at 195, right? And over the week, right, Bursa Malaysia managed to break past the 1645 resistance, thanks to uh, the utilities sector as well as the finance sector, right? And after the breakout, the FPM KLCI will be testing the 1665 weekly resistance and followed by 1694 weekly resistance. Okay, and so you can see that on the overall last week, the best performance sector was consumer, went up by 2.2%. Financial services went up by 1.77%, and thirdly, plantation 1.72%. The laggards are the property, technology, and the telecommunications. And as for the FKLI, we still keep bullish buyers, and we set our stop loss at 1600. So on the upside, after breaking past this 1650 resistance, the immediate one would be 1675 and followed by 1700, right? And so last week, actually, I get a lot of calls asking me how high the index be going, right? Over here, I just want to reiterate that the bullish performance of the our local market index within expectations, as we have mentioned numerous time and time, right? December month is actually the most bullish months in the second half of the year, and right now, of course, you see it went up, right? You should ask me much earlier, right, in the November month, where the index actually going for sideways, where opportunities are plenty during the November. Of course, right now what the market actually looking forward is actually the December move, and also we are getting closer towards January and February, where the February, right, is actually our Q4 results, and across the market, right, there will be a lot of dividends announcement during the February. That's why during this December and January, right, market is actually looking for those counters that actually could actually give out dividends. So as such, in the past seasonality, right, December month is always the bullish months. And I also want to share with you that once we move into the month of January, there will be a mild profit taking just before we move into the month of February, right? So I think that on the upside likelihood, we're going to test the 1675, and if the momentum follow through, right, we may see FKLI test 1700 before we close for the year end. So as for the FKLI, we still keep a bullish bias with stop loss unchanged at 1600 point level. Now for the FCPO, right, the corrections continue, and we have uh, corrects towards 3009, right? Overall technical setup remains bearish so far. I think a few factors that are affecting the sentiment. Firstly, the inventory level is high and the export number is very weak. Now, as of the last week on the 15th of December, right? Based on the month-on-month export number still below the expectations. And today is going to I think you're going to have the 20th export data, right? If the data below expectations again, right, then on FCPO will experience another round of selling pressure. So right now the downside support will be at 3009 and followed by 3830. But I just want to warn you that support tends to be weak in the bearish setup, and resistance will be strong in the uh, bearish setup, right? And so right now we keep a bearish trading bias with our stop loss point stick at our 4180 D level. Okay, now over the week, there are a few counters that I think are worth to mention. So firstly, Gamuda just won a project. Won these are best. They to participate in the battery projects with the Tenaga. So they are the biggest winner between Gamuda and also the leader Energy. But in terms of technical, right, you can see that Gamuda has been undergoing corrections, and the resistance is actually very stiff at a 5 ringgit level. So a breakout above 5 ringgit, Gamuda will be climbing towards 520 and 540. All right, of course, if Gamuda can stage a breakout, that will actually boost our FPM KLCI to higher. Now, at this level, right, the 470 will be a very strong support based on the price volume profile. You can see that this volume is one of the longest bar, right? Longest bar shows that 470 support is actually more meaningful at this level, right? So you can actually wait for the 470 to do some counter trades, rebound trades. Right, as for the Leong Hub, it has been steadily moving upwards, and last week has been testing the 72 cents resistance. So a breakout happened, we open door towards 75 and followed by 78. Downside support is at 69 cents. Thirdly, we have the tech stock also testing the 30 cents resistance level. So based on the about 3 to 4 months price volume profile, you can see that 30 cents is a very strong support resistance for tech stock. So once a breakout happen, tech stock will be going towards 32 and followed by 34. Right, if you stay below the 30 cents, then on it may find the next support at 27 cents. Right, and if you look at the weekly on the Friday snippet that we send out, right? Apart from Gamuda, right? SolarVest is also one of the counter in the limelight, as the Tenaga have signed the 21 years of PPA with several companies, right? And SolarVest is one of them, right? Apart from this PPA they have signed recently, right? I think one of the key thing that the market is really looking towards is actually the ATAP, how much tariff that or how much rates that government is going to buy from the ATAP these participants. So I think that this week, before we close for the year end, the renewable sectors will be one of the sectors that the market is actually looking forward to. Right. Meanwhile, I also want to do a little bit of advertisement here that tomorrow, Tuesday, at 1 p.m., Aiman together with John, they will be having a webinar to discuss about the outlook and also opportunities in the renewable sectors. Now, as you can see that Tenaga is trying to diversifying their source of fuel source from a fossil fuel. They want to move on to the more renewable. So I think the opportunities are still plenty for the renewable sectors players. So do not miss our webinar tomorrow on the Tuesday 1 p.m. Right. So at this level, we'll be looking at SolarVest at 3 ringgit 20 cents and also a higher resistance at 3 ringgit and 40 cents. Downside support will be 3 ringgit and also followed by 2 ringgit and 85 cents. Okay, so this will be a few counters that I think are interesting: Gamuda, Leong Hub, Techstore, and SolarVest. And we have one more trading stock report to be published afterwards. Once published, you can actually look at the WhatsApp that we are going to send out afterwards. So I'll stop here and pass the sessions to Sian on the Rasa Mingguan report. Thank you.
Thanks, Joseph. So good morning, everyone. So I would like to give a brief updates on our Malaysia trade reports, which was published over the last Friday. So based on the data itself, the November exports has increased by 7% compared to October surge of 15.7%, which is lower than the market consensus of 11.6% and our in-house projection of 12.6% on year-on-year basis. So by destination, we still see that the exports to seven major countries still recorded a positive growth, so led by specifically Singapore, China, and also EU. While the exports to EU and also Japan and also Korea has declined marginally when you compare to the same month of 2024. So by products, we still seeing that the manufactured good exports grew by 7.9%, so underpinned by increased shipments in E&E products as well as crude petroleum and refined petroleum products. So E&E products, which actually the largest exports, accounted by 43.6% of total exports, expanded by 15% for the month of November. So meanwhile, the imports also gained pace by 15.8% for November. On a net basis, the trade balance recorded the lowest surplus of 6.1 billion when you compare to 18.99 billion in the previous month. So we still maintain a sanguine view on the trade outlook for 2026. So with the external demand is expected to be supported by, firstly, we are seeing that there's an easing of tariff-related risk. Secondly, Malaysia's diversified product base and export destination. And also thirdly, continued resilience in E&E export. And lastly, we're also seeing that there's an improved clarity on the reciprocal trade policies following the conclusion of US and Malaysia reciprocal trade agreement. So a broadly uniform US tariff rate across ASEAN should also help to sustain the Malaysia's regional competitiveness. So and then over the coming years, we also see that export performance will be driven by three key trends, which including the strength of global and regional growth, where we projected the global economic GDP to accelerate to a range of 3.5 to 3.7 on next year, up from the estimated 3.2 to 3.3 for 2025. So meanwhile, the ASEAN economies itself are expected to outperform, so supported by robust external demand, resilient domestic fundamentals, as well as accommodative monetary policies. So, and then secondly, development in the US tariff policies, where we are seeing that the US tariff policies will remain a key watch point for next year. So while we are seeing that the conclusion of US and Malaysia reciprocal trade agreement, together with existing exemptions, will materially improve the Malaysia trade outlook, with about 64% of Malaysia exports to the US are now excluded from reciprocal tariff itself. So this has for now significantly eased the tariff risk and also provide a firmer support for Malaysia trade and manufacturing momentum. We are already seeing that in the latest IPI and also trade data, together with our manufacturing PMI, actually back to expansion. So another key event to watch for next year is the US midterm elections scheduled for 3rd of November 2026, where we think that the election outcome will shape the degree of congressional support for President Trump's trade agenda, and any signal of voter discontent could constrain the scope of further protectionist measures, thereby limiting the downside risk to Malaysia exports. So, and also how resilience in the E&A exports will also one of the key trends that we are watching for. So according to WSDS forecast, the global semiconductor sales are projected to stay robust, so reaching $975.4 billion in 2026, which is up by 26.3% for 2025. So this will give some support to Malaysia's E&E export as well. So combined with a sustained global semiconductor demand driven by AI and emerging technologies, so this could also continue to provide a key tailwind for Malaysia's exports. So speaking about semiconductors, at the sectorial level, we also continue to closely monitor the developments in the semiconductors. So especially on US tariff policies, so given their critical role in Malaysia's export portfolio. So while the uncertainty over potential US tariff do persist for the semiconductor, so we're seeing that the near-term risks appear to be limited, as the reciprocal trade agreement will also grant a special consideration to Malaysia's semiconductor sector under the Section 232 of the US Trade Expansion Act 1962. So I think that's all from me. I will pass the line to the next presenter. Thank you.
Hey, 1 second.
Hi everyone. I'll just start the presentation first. Yeah. So, good morning, everyone. Today I'll be presenting our initiation coverage on Cnergenz Berhad. So, let me start with the background of the company. So, Cnergenz is a Malaysia-based electronics manufacturing solutions provider (EMS) with a strong growing footprint across the Asian region. So, the group has built a strong presence across Malaysia, Thailand, Vietnam, and other key Asian markets, positioning itself to support regional electronic EMS expansion. So, Cnergenz has established themselves as a key player in SMT line, surface mount technology, which is a critical process in the assembly of semiconductors and electronic devices. The group also specializes in designing and developing and customized production line solutions for multinational electronics and semiconductors manufacturers. So, from a business perspective, Cnergenz operates across three main segments. Firstly is integrated SMT manufacturing solutions, which include full productions of the line system and smart factory solutions, which are based on FY24 revenue. It contributed about 25% of the revenue. Secondly, the segment conclude sales of standalone SMT machinery and equipment, which remains the core earnings driver, accounting for about 70% based on FY24 revenue. The third one is other services, which is after sales of the technical support and training, contributed the remaining about 5%. And moving forward, they will add one more segment called OEM, which I will explain further later. So, in terms of customers, Cnergenz maintains a diversified customer base across different industries and markets. The group has a top five customer operated in distinct product segments, reducing reliance on any single industry. So, the largest customer will contributed about 80% of revenue as at 9 months 25 numbers. So moving on to the valuation, we initiate a coverage with a buy call of with a TP of 55 cent, pegging to 21 times FY26 PE, which is one standard deviation above its forward mean. So this would imply about 25% upside from the current levels of 45 cent. So at present, Cnergenz is trading at undemanding about 17.5 times FY26 PE, which we believe does not fully reflect the upcoming earnings inflection from the low base of FY25 forward earnings. So, I mean, if we compare to the expected FY26 and FY27 earnings growth, so the earnings growth will be driven by three key pillars. So, firstly, as you all know, Cnergenz is tied with the E&E capex upcycle. So the global semiconductor equipment upcycle is now extending into the back end. So test equipment sales are expected to grow about 12% a year on year in 2026 and 7.1% in 2027. So it will be driven by increased device complexity and advanced packaging and higher AI and HBM performance requirements. So improving equipment utilization, new product launches, and ongoing production relocations are expected to bring a strong capex cycle into 2026. So by that, I mean, Cnergenz will position to benefit from this trend, supported by its strengthened Asian following the ITWEAE acquisition earlier. I think it was about last year. So with the order book of around 40 million as at 9 months 25. So the second growth pillar is the scaling of smart manufacturing solutions, which we expect to become a key earnings driver from FY26 to FY27 forward earnings. So Cnergenz is moving beyond just a traditional system integration by also embedding by embedding small and narrow language, which we call NLMs and SLMs, into its product. So these tangible efficiency will gain across the automation workflows. As the major EMS player resume its capex, as well as we also benefit from China plus one supply chain shift. Smart factory project would incline from there. Currently, Cnergenz has a healthy tender book of about over 100 million in this segment, with an estimated 20 to 30% conversion rate, which could begin to earnings from second half 26 next year with a double-digit margins. So the third pillar is a Cnergenz technology, ODM and OEM that I mentioned before. The group is also involved with this business model with a long-term target of achieving about 50% revenue mix from ODM and OEM activities for the longer term. So the Cnergenz entered into collaboration with two established equipment makers from the US and Germany, with further three other partnerships currently under discussion. So one of the new solutions deployed in ICT, which is in-circuit testing platforms for AI server modules, featuring AI-enabled capabilities to enhance automation and handling efficiency in advanced SMT. So separately, the other Cnergenz has also co-developed a modified modular soldering system for high-powered electronics and automotive applications. So initial contribution from these two ventures are expected from fourth quarter 25 with a meaningful ramp up into 2026. At the current valuation of 17.5 PE, the stock does not, I believe, the stock does not fully price in the upcoming earnings inflection. So underpinning by our buy call with 55 cent target price with 21 times PE FY forward earnings. So I think that's all for me. I'll pass the floor to Aidil. Thanks, everyone.
Aidil, we cannot hear you.
Hello? Hello? Can you hear me now?
Okay.
All right. Okay. Thank you. Hi. Good morning. I'll be presenting Mynews FY25 results. So just a bit of a background. Mynews operates convenience stores across Malaysia, covering the core Mynews format, CU Mart, which is the Korean-based convenience chain, WH Smith, generally in airports, Maru Coffee, and Super Value. It's a business many people understand on the ground, but over the past few years, it went through a tough pandemic reset. What we're seeing now is that the company has largely come out of that phase and is starting to run more steadily again. So FY25 came in within expectations, but the more important point is the trend. Revenue is growing, margins are holding up above 38%, and profits have improved consistently every year since the pandemic. The key shift is now management is running the business via selective store expansion, focusing on high traffic locations. This discipline is why margins have stayed stable despite what we're seeing this year, where there are few fiscal policies such as the minimum wage adjustments as well as SST expansion, which could hurt costs. Besides the core Mynews format, within that, there's a CU month, which is a real inflection point. It has turned profitable after years of losses. CU used to be the one that dragged the group earnings, and now it contributes to its earnings. If CU stays profitable on a full year basis, the overall earnings profile become much cleaner. Sorry about that. And then looking ahead, the potential East Malaysia rollout, possibly via franchising, would help CU because it's an interesting angle where it could scale without putting pressure on the balance sheet. And then there's WH Smith. It's a smaller revenue but higher margin, contributing to roughly about 10 to 11% of group earnings. And it's mainly from tourist-dense locations like airports. With tourism building into VMY 2026 and Mynews planning to roll out 6 new outlets, a mix of outlets and kiosks in KLI A1 by 2026, this segment is well placed to benefit. And then also we can see that Malaysia has raised the VMY tourist targets from initially 36 million to 47 million in 2026. So this is very supportive for the retail, the airport retails. And then Super Value, on the other hand, should continue to benefit from higher SARA spending, but given its low store count and lower margins, we don't expect the impact to be material to the group level. So the main takeaway is core Mynews format, the Mynews store are steady and still expanding. CU is no longer dragging earnings, and a projected uplift in tourism should help support WHS Smith. Mynews looks to be entering FY26 on a stronger footing. We maintain buy with a TP of 80 cents, implying a upside of 40% from the current price. Feel free to look through the report. I'll stop here for now, and thank you. Have a great week ahead.